So, traders, on today's video, we are going to continue where we left off concerning how you can use one trading zone to win your setups, even though, even though it's inevitable that you will win every trading setup. Do you guys get that? So, on the previous video, I broke down how we took trades on the NAS based on trading one zone, one session, I think, and also one candlestick theory, and far most importantly, how we used the same setups on the same zone to capitalize on every setup or every trade that we have executed. So today's video, we are going to continue where we left off, and this will be part two. But today we are going to be using strictly USD CAD because the previous two setups were on NASDAQ. Today's setups are USD CAD. But before we get any further with the video, make sure you like, you subscribe, you share, you comment, you turn on the notification bell. You click the link to sign up with the broker that I trade with and highly recommend. Never mind the noises and the sounds in my background. My family is around. They can't stop me from sharing these wonderful gems, and I can never stop them from having the fun that they want to have. Do you guys get that? But without further ado, let's not waste time. Let me share these wonderful gems. Let me grow your knowledge. Let me make you 1% better. And let me, far most importantly, make you the greatest trader that you're destined to be in this wonderful trading journey. You guys get that? So today we're working on USD CAD, I repeat, right? So I want to let you guys understand why we used the zone first before I can share with you guys how we took those trades, right? So USD CAD, right? You can simply see that, okay, price had this from here. Price had this move to the downside and the sideways movement, and a push to the upside, creating a higher low, and a continuation push, creating a lower low, and a push, creating a lower high, and a push again, creating a lower low. So price possibly gave us a what? A double bottom, right? So obviously from price giving us this double bottom, we anticipated those continuations to the upside. We also had this bullish candlestick violating our previous lower high, anticipating that reversal to the upside. And then you look at it, price higher low, push, higher high, push, higher low, push, higher high, push, higher low, and then we hit this push, creating our higher high, and this push, creating our higher low, and price continued to the upside. So the gems are here. The juicy nuggets, this is where the juicy nuggets are, right? So if I had to remove that and if I had to remove this, you can simply see that, okay, once price created this higher high, price came back and created this higher low, right? So from price creating this higher low, we now understood that obviously price is in an uptrend, right? So from price creating a higher high and a higher low, and we now understood that price is now failing to break below this higher low. And what happened from there? Price had a continuation to the upside. But this is not where it all begins, right? It all begins here. Once price created this high, right? You can clearly see it, right? Once price created this high, price again had a violation of this high. If I had to do this so you can see this picture perfectly. So price created this high and price broke above the very same high. So from price violating that very same higher high, we now anticipated possible continuations to the upside of price creating new highs, because you now get the picture that price is in a higher high, price is a higher high, and higher high, and a higher low, and prices violated our higher high. So obviously from a violation of our higher high after price created a higher low, there's no way, or there's no way in any shape or form that price might not look to continue creating new highs. There's just the basics of pure price action. Do you guys get that? So once price gave us a violation of this higher high, the coming candlestick traded above the candlestick that violated our higher high, meaning prices now have a new higher high. Obviously, with that being said, that's when you anticipated that price might still continue moving to the upside. And then you look at it, price gave us a clean 20 pip stop. We had a 20 pip stop, and we had, I think, a 35, yeah, a 26 pip target, right? So this was our first trade. This was now based on what? Simple higher high, higher low, continuation to the upside. So once you see that price has now created this higher high, price then hit this pullback, coming back to our very same zone. So this might be our first reaction. This might be our second reaction. So because now this was our second reaction. And when you look at it, and when you try and see this from price creating this higher high, price created this higher low, and had a continuation of price creating a possible new higher high. So from creating this possible new higher high, what happened from there? Price pushed to the downside. So why didn't we capitalize on this move? It was Wednesday. We don't trade Wednesdays. But this was going to be a clean trade if we had to take it based on what happened on the previously and what's happening currently, right? But because it was Wednesday and we don't trade Wednesdays, so what did we do? We let it slide, right? So price coming back here on Friday, you can clearly see that obviously our current price was bearish, right? Well, our current price was bearish. The dollar was weak and the Canadian dollar had strength on Friday, right? So from price having this push to the downside, we now understood, or we now had two anticipations in mind in the CUT Academy team. One, based on how our structure, based on how our current price is, there's a possibility that price might do it, might continue to the downside. Two, based on what happened previously, what happened currently, and what might happen on our market price and our current price section, price might give us a possible reversal to the upside, right? Those are two anticipations that we had in mind. So when you now break down this, just to show you guys what happened and how we capitalized. So we now understood that, okay, on our London Open, which was 9 a.m. CAT, price was still looking to be bearish, or price was still giving us signs of being bearish, right? So price had this push to the downside. So from this push to the downside, you can clearly see that price started giving us rejections above the very same zone, right? So with this rejections above our zone, that's one of the first signs that we anticipated that price might give us a possible reaction or a possible reversal to the upside, right? So multiple rejections were our first sign. Two, price gave us this momentum candlestick on our London Open, on our New York, on our pre-New York Open, which was 1400 p.m. CAT, right? Price gave us this push to the upside, which was our momentum candlestick. Like we shared in the previous video, the catch is once you find, or once you see momentum stepping in the charts above your zone, that's when you can capitalize, but only if the candlestick closes with a moment. Looked in. Oh, okay. Only if. Sorry about that, guys. So another thing was based on what? The momentum that price gives us, obviously the close of the candlestick above that very same zone. That's our momentum, right? So when you now see this momentum candlestick, you now can get the picture that, okay, price is now having multiple rejections above our zone, and two, price gave us a momentum candlestick, and obviously with a momentum candlestick, that's when we can easily capitalize. Do you guys get that? And once you see this, that's when you took our trade right here. Once this candlestick was bearish and flipped and traded bullish, that's when we put our money to work and was like, nah, price will still continue moving to the upside. Let's put our money to work with a clean 20 pip stop. And here I think we went for 40 something pip target. We went for 40 something pip target, right? Somewhere, was it somewhere right there? Yeah, it was somewhere right there. It's a 65 actually, guys. It's a 65. My bad on that one. It's a 65 pip target, right? So that's how we took this trade. But our first target was mainly took here once price created this new all-time high, right? But again, we held because obviously we took partials and we let the rest move because we still anticipated that the dollar was too strong. Do you guys get that? And what happened from there? Price gave us a continuation push, and that's when we took our 65 target because obviously it was Friday. We don't want to stick our asses on the markets for way too long, and that's when we did what we had to do, and we dipped, right? So traders, understand the nature of how we took this trade. Price is in a certain zone. Price, every time price is trading above the certain zone, price gives us a reaction to move to the upside. That's the only catch, and that's how we anticipate it. The other thing is we stick to two trading sessions, the London and the New York. The other thing is we used candlesticks in order for us to have good anticipations or to have stronger confirmations so we can easily put our money to work. And four, we managed our risk and we never over traded, and that's how we have capitalized. So if you want to be part of the COT Academy team, or if you want to capitalize or catch those great setups easily with no one on your side, with no one giving you signals, with no one giving you confirmations or hints into what to do, then I guess you can use this opportunity to send us a DM, to send us an email, or to call us or WhatsApp us, or to even comment down below that you are interested, and let the COT Academy do the rest from there. But without further ado, I want to see you guys win. I want to see your trading change. I want to see your trading grow. I want to see your trading be better. And far most importantly, I want to meet you guys on top, like where we're destined to be. Do you guys get that? But without further ado, this is your boy Harlem, King COT, and we're signing out.